Welcome to Advanced Course Part 6, Entries and Exits. Alright, if you're enjoying the content so far and haven't subscribed yet, go ahead and do so. If you want to donate and support what I do, you can find those details in the video description. And if you haven't checked out the Twitter and TradingView account, I would suggest you do so, as I post up my day-to-day interactions, charts, content release schedule, and things like that on a regular basis. Alright, without further ado, let's get into it. Okay. What is an entry and an exit? An entry or an exit is the point in where you are deciding to enter or exit a stock. So therefore, an entry would be a point where you decide to buy. You've identified a spot where you want to buy a stock or get into a stock, and you enter it. And an exit is the opposite, where you want to get out of a stock or get out of a trade. Okay, pretty self-explanatory. I don't need to go too much into what an entry and exit is. It's pretty self-explanatory. The criteria of an entry, the criteria of an entry, I should say. Criteria, both, I guess, would be correct. So before we get into this, I'm going to, I was asked to do a chart on futures, NQ1, so NASDAQ futures for somebody the other day. And I kind of want to just break down before we get into identifying more and more about what an entry is how I came to the conclusion of what I'd be looking at on this chart. So immediately what I did is I went and I looked at the daily chart, and I saw that we had the start of a downtrend right here at 7,300. And these are just screenshots that I had sent to somebody, and just to illustrate what was happening. So immediately the first thing I did is I identified kind of what the daily trend looks like, because we looked like we had some movement up here. 1, 2, 3, 4, 5, 6, 7 days of up movement. So we created an obvious uptrend in which we needed to break the start of this downtrend right here and the start of this downtrend right here. So I kind of broke this down over the course of time. And you can see the date stamp on this right up here, December 6, 2018. So if you want to go back and cross-reference my work and check to make sure I didn't, do something funny and post this looking behind at a move. This was something that me and somebody went through in a mentoring session. So the first thing I wanted to do in this is I wanted to identify where the move was at. And so first thing I did was I looked at where the move was right now, right? And that's right here. This is where the move is, and this is on the 240 minutes, so the 4-hour. And first thing I'm doing is I'm marking out the start of an uptrend on a 4-hour here. So, it's important before you get into entries and exits to understand what's going on your charts, and to know where your targets are and where you're going to take these entries and exits. If you don't know where you're taking them and the bigger picture of things, if you don't have the information, things like this red line up here, which is that daily that had to be broken or tested at least before it got broken, and this 4-hour down here that is tested right here. If you don't have the information on an overall scale, right, going back to the daily, if I didn't know this was here, I wouldn't know that's an exit target, right? That's a short target if we take a long somewhere here, right? So going further into this move and breaking it down, the first thing I noticed is this is a tested level already here. This is close enough to be considered a tested level. Actually, it's not. I think after breaking it down, and that's why it's not a dotted line, I decided that it wasn't a tested level. Otherwise, I would have made this a dotted line. And you can see right here, so the next thing I did going through this move, this is the 15-minute chart. That's a 15-minute chart. What else do I have here? The continuation of the move. Okay, so yeah, I ended up actually deciding that this wasn't a tested level. I went in here and broke down the fractal information more, and I saw that there was another level in here, and that's why I left it as a solid line, because my tested levels I'm putting as a dotted line. So you can see here, I've marked out some downtrends that need to be tested. So I have one downtrend right here, and this was fractal information deeper in the hourly charts, and I have a downtrend here, and then I have a downtrend here that was tested. So moving forward into this move, right, and we're not going to worry too much about dissecting that. This is just to show how you would start to understand proper entry of a trade. Going into here, we fast forward in this move to see this is now a tested trend. This is an untested trend, and then as we go forward in the move, what did I do is I started to mark out the more local trends. So on a 15-minute chart here, I'm marking the the final part of this uptrend right here, which it needed to hold. It failed. I then marked this here, and this then became a tested level right here when this bounced here. So now I have a tested level here. This to me was a tested level as well. We marked that up going forward in the move. So the advice that I had given this person was that the yellow line right here, the not financial advice, I guess, if you, whatever you want to call it, he asked me what I thought of the move, and I told him this is what I think could happen, is that we are going to test this 6600 level because it hasn't been tested yet in order to break up to that higher level up here. And then as the move went on, it actually did test that level. So we can kind of close these windows here and you know, get rid of this and go to the move and how it kind of is unfolding right now. And this is a part of finding entry, and the reason why I wanted to start with this example is because part of finding entry in moves is understanding where something can go, right? Understanding when you go to something like this, you know, you've got a 4-hour chart. When you go to something like this, understanding where a move can go, right? And now this right now, I would mark this as a tested level because this has now been tested. And my next target on this would be the start of the next uptrend on the 4-hour chart because we just tested this 4-hour chart, right? So this is an untested level. And I know that if this trend is going to hold, where's my pen tool? If this trend is going to hold, good old magnet tool every time. If this trend is going to hold, right? We already know this is a tested level, so you know, a target becomes up here, which then starts to test up here. So really, you know, without getting into defining the entry yet, because we'll do that next. Really, the point of this is to show you guys that in order to in order to understand entries and exits, you need to understand the overall of the move from what's happening so far, or what's going on in the current move. And you know, what I would expect for this is that, you know, we've created this local level right here, right? This is the local level. This is kind of the end of that downtrend right here, and it's holding this level right now. So as long as this continues to hold, you know, I expect it to start coming up and back testing some other things, right? So that is kind of what you want to get into, and you know, where you want to start by defining entries. And we'll break down exits in the second half of the video, but defining entries and getting into entry targets, that's where you want to start doing it. So I'm going to use theta today because it's a trade that I've been in. I've been in a couple. I've been in theta this last day. I've also been in something new that came on Binance called Ren, which is Republic Network, I believe it is. I don't know much about the company, but regardless, it doesn't really matter. That's, you know, not what we trade based on. And finding proper entry on a trade. So finding proper entry becomes the back testing of trends, right? So let's go back to this here and just read through this here. So the criteria of an entry, right? And entry examples, and how to take profit. And how to take profit is kind of a part of the criteria of an exit. So we're probably just going to break down these first two to start: the criteria of an entry and an entry example. So if we go into here, a criteria of an entry is going to be something where, I guess we can start back here. You know, we're going to start a little earlier before, you know, so we could have seen this move, this big move up. And you go to a 4-hour chart and you start trying to find your trends, right? So you start trying to find trends, and, you know, you can continue back as far as you want until you find the most, you know, recent untested trend. But when you are looking at entry, right? So I'll just start right here. Let's put Mr. Magnet back on, good old magnet tool. 4-hour chart, we're going to use blue. We're going to start keeping this synonymous with what we do. So entry on any coin you get into, any stock you get into, always first off has to be relevant to the level that you're looking at. So if you're looking at a daily target, so let's go to a daily target. Let's start here. If you are looking at a daily target, it's going to be more relevant to the point where if a trend on the daily gets held, right? If we start coming back here and a daily trend starts getting held, then, and where would a daily trend be? It would be right here. So this is the start of an uptrend right here. So this is the start of a daily uptrend. So if a daily trend gets held, well, you can expect for a larger move to come up. And actually, if you, let's color this red because that is our daily level, right? You can see a daily trend gets tested and held. So something kind of happens with all stocks and trends, right? Here's another start of an uptrend right here, right? Daily level gets tested and holds, and we're just going to leave it at that for the simplicity of this example right now without breaking this down too far. But something happens, right? You have these peaks that we talked about in the previous videos. And if you haven't seen the previous videos, I highly suggest you go and do so, as everything we build upon, like I always say, is pieces from the past, right? So you have two kind of criterias for a trade, right? You have two kind of things that happen. You have, say you have an uptrend here, right? And then you have an uptrend here, right? Like this. So you have trends within trends, you know, the same thing. And this is just on the daily. So don't take, you know, this into too much consideration. Like, oh, it's happening on the daily, so it must be the daily. It's always fractal. It's always relevant to what you're looking at. And we'll break this down a little further, because if you're looking at a daily chart, like, what is this, August 22nd to November 18th. So you would have waited, what is that, August to September, September, October, October to November. You would have waited almost 3 months for it to retest this level. So I mean, if you have the patience to wait 3 months and you're watching a stock every day for 3 months because you charted the daily level, sure, fantastic. But you know, conversely, if you chart something and you notice 3 months ago you had a level, and let's say you were right here in the move, right, and you said, okay, well, I need this to hold right here, because the start of this uptrend has to hold here, so that's where I am right now in the move. And if that fails, where's my next uptrend? My next uptrend would be here. So this starts to become identifying the entry points, and the entry points happen in a few different ways. And then you would have had another start of an uptrend there. So you would have had a few here, right? You would have had this one here, which is a bigger peak, and this is a smaller peak to the largest one that we did create, right? Kind of weird to say that, but we're not going to create it because we're not, you know, it's okay. But anyways, we have, the point is we have peaks within peaks within peaks, right? So we know right now that if this is failing and we're in this move, we can expect to test the next uptrend. And the next uptrend could have possibly been right here, right? You do have an uptrend there. So, and you do test it actually, you know, you first test this trend, right? You first test it right there, second test it. So then, you know, if you were to do this properly and have the chart mapped out properly, it would look like this. This is already a tested level, right? So you know that entry would have probably been somewhere on this, because this is an untested level at this point. So if you were to actually come back to here, right, to a point where you have an untested level versus a tested level, and you were to say, okay, what's going on in this move? I can take entry on this untested level because it's the start of an uptrend here, right? That's where I can take entry. You can take entry right there, and you actually get a pretty decent a scalp right there on that over 2 days, 12.51 to 14.03. So about, I don't know, maybe 12.6% or something like that. Just quick math off the top of my head. And then you would have seen that the move is failing, and we'll get into that in the later half of the video. Let's see how close I was. 12.6%. Let's see how good my math is. 12.3. Oh, it was close. It was just a guess anyways. It doesn't matter. Pretty ABC math anyways. So, you know, and now that this becomes a tested level here in this moment in time, you can say, okay, well, this is a tested level. We can expect to down test back here, and as time goes on, you know, we do just that, and we test right there, and that would have been a great, you know, spot for an entry right there, right? And you probably would have made some nice profits, which you did. Actually made some pretty crazy profits. This then becomes a tested level, right? So a point of entry could have been here. So identifying these points of entries are untested trends, right? So you're looking at untested trends, and you can see how. And right, remember, I don't pre-chart any of this stuff. I just pick whatever stock, whatever time frames, and I'm just looking at this stuff on the fly. And it's just because it's always the same, right? Nothing ever really changes. The results stay the same. It's just the way it is. So you could have taken a nice profit there, and then you could have identified this as an entry, right? You could have identified that as an entry. and you come down and let's see what happens. Whoa, you take this crazy move up, and that's okay. So we actually never get to come back here. And what happened, and why did that happen, right? So let's go back to this move. So we've identified kind of the criteria of the first entry, and we'll do this a few times on different time frames. So the you know, identifying the criteria is a combination of patience, is a combination of knowledge, and the use of charting with great accuracy. And this was just a very basic, simple example on the daily, and we're going to continuously break this down in this video so that you guys really fully understand this, because I think this is one of the most crucial parts to becoming a professional day trader or somebody who can make a constant profit in this space, because you can see here how much space was made to make profits in here, probably, you know, in the hundreds of percentages to make profits in here, maybe like 100% over the course of, you know, what is this, a week and a half, if you played this perfectly, right? If you play this perfectly, and it wasn't really that hard. It's just untested downtrend bounces with the other side of this, which is exits, which we'll get into later in this video. So let's talk about this now. We have something that happens here. So we know, right? And I'm going to, let's just get rid of that. My replay is already on. So we've now identified that the first type of entry can be on an untested trend. So if we were to enter down here, you know, we could buy here, and you can kind of see it as two different things. In one way, it's catching a falling knife, right? So if we were to have this as an untested level back in this move before this was tested, and you were to buy here, instead of here, you're buying here. In one way, it's catching a falling knife, right? And there's a way to avoid the catching of a falling knife, but you do also miss out on some profit opportunities. So catching a falling knife, when you're doing it properly, can be something very useful, but you have to have absolute certainty and great accuracy in this, because you can always catch a falling knife properly as long as you've done your TA right, and as long as you're fractal within the relevant information. It happens often when someone tries to catch a knife, maybe right here. And I don't know, you know, I'm not going to break this down too much, or the video is going to be like 3 hours long. There might have been a 4-hour start of an uptrend in here, and you might have tried to catch that over here, and instead you got whipsawed down here, right? And you would have lost, you know, 15% or 10% or whatever. But then if you saw the daily information, right? If you saw the daily untested level, let's change this back to untested. If you saw the daily untested level, you might have caught the right level. So the key takeaway is that as you go through, right there, right? So you would have maybe bought in here somewhere, right? You might have bought right here. That might have been something in this 4-hour chart or a 1-hour chart that looks like it's a start of an uptrend on a 1-hour chart. But what's happening on a larger time frame, on the daily chart, you just lost a daily uptrend. So you just lost, not only did you lose this one here, but then you lost this one here, right? And now you're going to test the larger one, right? Like a triforce, like triangle within a triangle within a triangle, right? So you may have caught a 4-hour or 1-hour trend, but then you got really pushed down to the daily, right? So again, you can catch a falling knife if you are very good and you are absolutely certain, and you know which time frame you're looking at and which one makes the most sense, and that becomes the thing of practice and doing it over and over and over and over, right? So that's the first idea of what is the entering criteria, is, right, these catching of uptrends. And now this is going to become a tested level soon here. Right there, it becomes a tested level. The next type of, and I think this is just where the move just takes a wild move up. Is it? Yeah. So the next type of entry on a stock is, and we are going to break this down because you can't see it on a daily here. We're going to break it down into the 4-hour and see where it happens. The next type, and that's why I marked up this blue line, the next type of entry on a position is when you have a trend tested. So let's just identify the first one so we're absolutely clear and there's no mistakes. The first type of entry is catching a falling knife properly, and I want to emphasize properly. I can't do that. I'm gonna have to just do caps. Okay, that's the way I. Oh yeah, nice, good one. Oh, even better. Just mistakes just rolling off. Okay, first type of entry is catching a falling knife properly. Okay, That's the first type of entry that we just talked about. The second type of entry, okay? And we're gonna put this down here, right? Because I just want to have just complete disassociation between the two, because they are two different methods. Second type of entry is the holding of a trend, okay? A trend. The holding of a trend. And I'm going to even color this differently, okay? So the second type of entry is something like this, where you have a clear trend, right? You have a clear trend that is created. This is a clear uptrend, which is then the bottom of a downtrend. So, you know, the level to hold would be two things here, right? You have the end of a downtrend, right? So if this was the start of this downtrend, right? Like that. And this is the start of this uptrend. So you have two trends there, right? You have a downtrend and you have an uptrend. So you have a valley followed by a peak, okay? So the valley, right, has a level there, and this is an untested, and we're gonna mark this as blue. Untested, right? And we're going to get rid of this stuff for now because it's not relevant anymore. This is no longer relevant in our charting for this. And I'm going to take these away because you guys understand that now, just to clear this up. So you have the end of a downtrend and the start of an uptrend. Now, the important one here is the start of the uptrend, right? So you have the start of an uptrend. So you know that if you start to come and close this uptrend, right? Just like we, good old magnet tool. Fun times. You know that when you start to close out trends, just like right here, this is the downtrend, this is the top, right? This is the start of the downtrend. And let's put another level here. This is the start of the downtrend. When you start to close out the top of this downtrend, you are signaling reversal, right? This is an untested level, becomes tested. You then are targeting this downtrend right here, which you first touch right here and establish that tested level, right? Right there, like that. And then you have this up here, right? Which tests over here, and so forth and so forth. And that's how the move escalates up and up and up and up, right? It constantly back tests the trends that created it. So to further go into this, you have this trend right here. And the reason why we talked about back testing these trends is because when you break them, that's what you need to do to move up. Just like on the opposite, when you break down, you need to lose those uptrends in order to move down continuously. So when you have something like this, right? Oops. When you have an uptrend that's created and you come up, you will come back down to test it. Okay, you will do that first touch bounce. At this point in this trade, so we are going to take our replayer tool. Okay, where is it? It's being funny. Oh, there it is. We're going to take our replay tool here, right? We are going to, darn it, anyways. Oh, okay, technical error. Let's try that again. Okay. If you come back and back test this trend, so if we are in this move right now, we know that if we lose this trend, we are going to be moving down, right? We are going to be moving down and creating a new downtrend that we need to back test to break, right? So right here, we break this trend, but we close above it, okay? If this trend holds, this is entry. So if your uptrend tests and holds, that is entry. That is going to be your other criteria of entry. So let's take a look, right? It holds, it holds, it holds, and it actually tests this level here, so it bounces off this. This is that point in time where this daily level from the past gets tested and holds, right? So in this moment right here, right? This moment right here, that would have been entry. When you back test a trend like this and you come down and then back up and you are holding the level, if these candles are closing under it, I'm fully expecting this to test and then maybe a test down to here, right? Because you're just, it's just the same as it always is in every other lesson. It's just the back testing of trends, right? When this holds, that is entry, right? And then let's go back to this for a second before we move forward, because we want to be able to kill two birds with one stone. Okay, how to take profit and how to identify the criteria of an exit. So now we can start getting into that, right? So with that same thing in mind, we have exit criteria, okay? Exit criteria right now would be this. That would be exit criteria because it's the start of the downtrend, right? And if that breaks over and holds, then we know it's you're reversing the downtrend, right? So you actually would have had a second opportunity to get into this. It tests it one last time, right? And this is a perfect example of an uptrend that was tested and held, right? Happens here. And remember, this is our target, right? So that becomes the exit. When we are entering here, we know we have an untested downtrend here. This is exit, right? Because we know it's going to bounce. And even if we don't want to continue to be in the move, or sorry, even if we want to continue to be in the move because we believe it can be going up more and faster and faster and harder, you will still test that trend and move down and average your position down and take a better exit on this coin to get a better entry on this coin, right? So right there, you could have exited right here, and let's see what happens next, right? This is going to be that first touch establishment to make this a tested level. It's going from an untested level to a tested level, right? And it is now completed testing this trend. So we know next target is this, right? So then we can now buy somewhere back down, right? And it actually tests both trends in this one level. And this is where it's starting to look pretty good. So what's happening here is you have a trend that's holding, right? Because really, it needs to, right? Remember, this is the start of the trend. So it needs to hold this. And when this is not back testing, right? When this doesn't have enough pressure to back test, it's going to continue to move up. Right? You notice a difference here between these two moves. This move here, you have an uptrend that starts, right? Right here, you have an uptrend that starts and it comes back down to test this uptrend to see if it can hold. And when it holds this uptrend, it can now start to break that next downtrend. You see that? It can now start to break this. And when that's broken, it can break this. And then when that's broken, it can break this one, and so forth, right? So the difference in this uptrend is this is never back tested yet, right? So what do you have? You have something like this right here, where you have the bottom of the top wick, right? So you have, let's just get this exact before we continue. I'm pretty anal about those things. So you have the bottom of the wick up and down. So if you remember back to the lesson where we talked about the top and bottom wicks of candles, this is the wick high on a 4 hourly, right? You have the high and the low. So when it's holding this low, it's not losing that move. And it starts to here, but it quickly climbs back over it. But the key thing is it never retests this trend right here. So I'm assuming this is right in and around where theta is going to start to really shoot up, because it's holding its swing high candle. So it's holding its swing high candle. So that's how this move is different, right? That's how this move is different than this is, to where something comes and back tests. Good old magnet tool, you're the best. So where it starts to come and back test the trend. That's the difference, right? And you see it on the other side too, right? Where it back tests trend. And if something fails to back test the trend, it's going to move lower. So here's a good example of the other side of it, right? You have a trend right here. Come on. You have a trend right there, and when this fails to test it up, well, it's going to make a new downtrend, right? It's going to make a new downtrend here, and it actually takes a lower move, right? So this is failing to regain this downtrend, just like this is failing to regain this this uptrend. So the same thing, just reverse, right? Okay, so that's where it makes its move up, because it just continues to hold this trend, and it just continues to hold this, and it never back tests the trend that started the move, right? So, where does that leave us, right? Where does that leave us in this move? Well, right there. So that's how you identify the criteria of entering a trade, and it's fractal, right? All this information is fractal. If we were to go and let's go back to the daily here. If we were to go back to the daily and see the downtrend, let's take this off. Let's take this off. Let's take this off. This downtrend, this downtrend, this downtrend, and I'm assuming this is going to be fractal to the weekly, because you're not really seeing anything here in the daily. So there is a downtrend here, right? And when this broke, you would have been able to test this downtrend here. So you have an untested downtrend, and we're going to make this white. or silver, whatever. You have an untested downtrend until it hits that point right there. And then your next trend is right here. But the difference is this is a tested downtrend, right? This is a tested level. It tests right there. So where's the next downtrend start? And actually, technically, it would have been here because this would have been fractal maybe on a 4-hour or maybe on a daily. That would have been the actual point where this started moving down. But whether it's here or there for this move, it doesn't matter. It hits at both. But, you know, this would have been the test of that trend, right here. I'd have to break this down fractally. And then even going up to here, that would have been the test of that downtrend. So you see how this move was set up that once this broke, right, this was untested, which then just became tested and broke right through. And I'm sure if I broke this down on the daily, that's day 1, and then this up here is day 2, right? So it's the same thing that we're talking about in, you know, in entries and exits. And this is why these testing and untesting of levels is so important, because this was an untested level. And when it tests right here, right, I wonder if the replay tool will... I wonder if this will show it step by step. Probably not, but we'll just try anyways. I don't think it will. But once this level becomes tested, once this untested level becomes tested, and you already have an untested one here, you can see why theta moved up so much, right? Let's see what it does. Okay, so it's actually stepping through, I think day by day by the looks of it on this. So we'll actually be able to see where and how it breaks these. So that all happened in one day. This chart's becoming a little bit of a nightmare here, but you know, part of dissecting this stuff is understanding this stuff, is dissecting it further and further. And there really is no clear first, second, third test here, other than the move had so much volume at this point when it's breaking this level, and it's going from you know, this right here. Let's clear this. It's just too crazy for me. Remove all drawing tools. That's okay. We can redraw what we need, right? And you know, really, it just has so much volume. I'm assuming at this point, you know, coin that's making 80% or 60% and has a clear target to make another 100% is, or another 50 or 60% is kind of like a no-brainer. And you know, fractal to the 15-minute chart. Okay, we're on the 15-minute here. Okay, go back to the 4-hour, and let's get current to where we're at right now in the move, which is right here. And so you guys can see how, you know, the testing of these trends really becomes irrelevant information, right? So that's how you'd identify entry and exit. And you know, right here, when this trend starts to regain, or when this trend starts to regain here, it's in here somewhere. I'm sure it's fractal to the hourly. It looks like it's right here. Probably this was the uptrend, or a notable uptrend would have been right here. I guess it would have technically started back here. So, you know, when this thing goes and holds and starts to come back over, it's obvious entry, right? And just like we saw on the other chart where we saw it come up and then down, sorry, where we saw, I'll draw it on the screen, where we saw, you know, the level here and the stock comes up and down, but then it starts to regain that trend. Right, this on a 4-hour or a 1-hour might look like lost trend, but then on a daily, it's just a wick. So on the daily, it's fractal. It's, you know, the candle's like this, right? It's there and the wick is down through it, right? But on a 4-hour, you know, you've got candles closing under it, like right here, right? But it's all fractal, and that's where the journey becomes of finding exits and entries. So let's talk about something more recent and relevant, and where I took a position on theta just recently. So I've been playing theta pretty religiously these past few days, and I've made almost every single entry up and down on this thing. And you know, where I started to identify these things is theta started to come down. You know, from this area here, it started to come down, and this downtrend gets created on the hourly. So you see, you have a downtrend here. So really, what I was looking for was this downtrend to hold. Right, so if this downtrend is holding, I know that this is kind of going to be a constant entry spot, and then, you know, a second entry spot as right here, because these are the two notable downtrends, right? You have one, and let's change this from silver, make it the same as we always do on all charts. It's 15-minute. I'm going to do teal for this one, or this light blue color, because I use that for 4-hour. This one I use for 15-minute. So, you know, we have a trend here, good old magnet tool. We have a trend there, and we have a trend here. So, you know, this is where I'm looking for entry on all these. On every time I'm entering it, is I'm first entering here, and I'm looking to close the downtrends, right? So every time I'm entering on these sides, right? Every time I'm entering on this side of it, this candle wick body right here, I'm exiting on the opposite, right? So the valleys are where I'm exiting, right? So I'm exiting on valleys, and you have to start, right? Like this is the start of a downtrend right here. This is the start of another downtrend right here, right? Like that, right? And when these start to break, then there's going to be something up here, right? So it'd be like this, right? So my exits, and now I'm going to mark my exits with a different color here. So I'm going to mark my exits. My entries are going to be this teal color. My exits for this video are going to be the, okay, let's go green. Profit, green, money, right? Yay. That's a terrible example, but you know, whatever, doesn't matter. It's okay, you guys will follow. So, you know, my exit targets become these valleys here. And this is kind of one, but I identified this as my final target just because on the hourly, it was a more relevant level. And right here. And whenever I'm exiting a coin, things like this happen, right? You do have things like this. So, you know, with the testing of trends, what happens is an exact spot gets hit and then it gets dumped down into very fast. So I'm never exiting right on this line. I'm always exiting a few percent before for this exact reason here, because this is technically a tested level as it just punctures right through right there. But sometimes you have people who know this stuff and then they just market smash straight down because someone puts, you know, a couple Bitcoin as a buy right here, and they know they can't sell, you know, the difference between 1388 and what is this 1394 is 6 sats, which is less than 0.5%. They know they're never going to sell that 3 or 4 or 5 Bitcoin, you know, consistently on this level. Maybe they might sell one, but then they're stuck holding the other when they could have just simply sold right here and then just rebought down here somewhere, right? So breaking this move down, it becomes pretty simple, and we're going to go through this move step by step for entries and exits, and the defining of the exit of defining the exit. So criteria of an exit and exit examples, and how to stop loss is what we'll talk about after, because we're talking about the first final point in the criteria of an entry, because the point of an entry is to exit with profit, and then after we talk about this move, we will talk about stop losses and kind of where to get out of a trade if you're in it and it's starting to fail, right? So let's go back to this chart here, and we're just gonna cut it down to here, right? So, you know, first off, I know this is a trend right here, so I'm gonna say this is a potential bounce target, and I don't know if this is actually gonna be right fractal information. We're gonna make this one yellow. Yellow is gonna be the lines where it's a kind of like a cayenne color yellow. Yeah, like a mustard yellow. If I was to catch a falling knife, I probably wouldn't be doing it on a 15-minute chart, so I would not be buying this level, but I might be looking to see if it does something like this, where it tests the level, comes back, retests it, and holds, or it tests the level, probably bounces up, breaks the level, does a little bit of this, and then breaks back up at the level and starts closing like that, then, you know, I know it's going to curve up somewhere like that. So because this is a 15-minute chart, I'm not voting too much weight to this. More so I'm looking back in charts like 4-hour targets, because you have to realize how long this move is. You know, this is really starting from here, and if you were to break this to an hourly chart and a 4-hour chart, you would see a much different picture, right? This looks like it, this looks like it's good entry, but that's on a 15-minute chart. So you know, what's going to be respected more, a 15-minute start of an uptrend, or the daily, if the daily is 100 sats lower, right? So you have to realize that, and how long it took to get to that point as well. It's not just about the bigger target, but it's also about how long it took to get to that point. If you have something that's really squirrely like this, you know, a 15-minute chart's going to be great. But again, it's fractal, and you have to, you know, search for that information. So let's see. I identified this could possibly be a potential buy target. And And clearly it's not, right? So I would not have bought there. I would not have caught a falling knife there. I would be catching a falling knife on like a daily or a 4-hour chart maybe, something more relevant. So just going to delete that. And then, you know, the next level I'm going to look for is potentially, well, this isn't really an uptrend, so nothing here because this looks like it's still bleeding. Okay, so right there. So I know right now that, you know, we have the start of a downtrend, which is right here, and we have the beginning of a we have the beginning of an uptrend down here and the beginning of a downtrend here. So that's kind of where this is at right now. I would look to see if this level holds, and if this holds, I would be buying, right? So this actually never comes and tests up to this trend. So it never actually gets to establish this touch on this trend. So I know that this is going to be moving down, and this will be my profit target in the future, right? So let's mark this now as a bold level, and I'm going to mark this as a bold level as this is profit target. So we're just going to do this. We're going to strike it to pretty bold because I know this is a profit target for the future because this was a downtrend, right? Okay, so the same thing happens here. We create a downtrend here, and instead of this now, I want to target the more relevant because technically, if this is going to test, this has to test first, right? So on a 15-minute chart, I could have both levels, right, like this, or I might have an hourly level up here that was the downtrend. So this might not be relevant in the moment, and this is where you'd have to break it down fractally, right? So if we were to go to the hour, right? And this is going to kind of screw up our chart, but that's okay. So you see how on the hourly chart, because it kind of was common sense that, well, maybe it's not common sense, that's the wrong term because it's not so common. This is very, you know, it takes years to get to this level. I could see based on how the wicks were formed that this was probably the part of a larger trend. So I know that little level right here wasn't relevant because on the 15-minute chart, if this is going to break, it's going to take some time, and that's going to start to form hourly candles that will target the beginning of the trend in total, not the trend within the trend, right? Not the micro time frame trend. So let's go back to the 15-minute chart, and let's chop this back to, turned it off, whoops. Let's chop this back to here because this is where we saw where it was starting to hold, right? So now my entry is going to be one of two things. I can either enter once this holds, and if this holds, then my exit would be here, right? Or I could just simply take re-entry back down on this level somewhere, right? So let's see what happens. Okay, so there's my re-entry. That's exactly when this bounce happens, when we test this again, first test rejection like that, that's where I'm taking entry. So I would have entered right here with the idea that I need to close out this trend. So let's say I enter, I don't know, right here, whatever it's at right now, 13.19, right? My exit from 13.19, it would have been up here, this trend here. And this is a good example of where you could have exited because it might not quite test the trend. And it looks like that's what happens, right? So always exiting a few sats before, not always, but it, you know, it depends on the size of your position. This is 4 sats before, so, you know, yeah, it's the same thing I talked about over here, where taking profits is based on your position size and so forth. And you have to make your own decision as to what works for you, you know, where you're going to take profits somewhere within this region. I never recommend taking profits right on the level. That's the level where you're going to sell, but you know, you should always sell a few sats below, just good practice. For the simple reason that if you did that, yeah, it might come back up and test this level to be technically accurate, but then you have more bounce targets, right? Then you have more short targets. So as you become better, you know, maybe don't, to start with, don't start doing stuff like this. Maybe just take profits somewhere halfway between, and over time you'll find that perfect spot where, you know, maybe you start by taking profits here because you're halfway between the two levels, so you can secure what would this be, 1321 to 1350. So 13.5 sats, or if 13.5 is 1 sat, what do we have here? 22 plus, or 1322 plus 13 and 13 is 26. 26 plus 22 is 48. So 48 sats, you would have made 2% on this swing trade. And if 2% is what you need to you know, if you do this 5 times a day for 2% each time and they're safe trades, then hey, then you do it. And over time, you know, you'll be able to get 2.5 and 3 and 4%, and you know, you'll be able to find the perfect marks. But you know, to start with, you know, just find your groove first. And right there. So either way, you could have taken a second trade here and got another 2%, or you could have not quite said I'm not exiting because you want to test that level. And let's see, let's just keep it basic, and we'll say from here to here we made 4%, right? And that would be sell. And then really I'm looking to re-enter somewhere in this region here, right? Somewhere on one of these two levels. And it's right there, right? So we bounce off this level again, so that could have been entry, or we could wait for down here. If this level holds, right? So you see how it's starting to hold here, right? You could have taken entry again right here, right? You could have taken entry when this level's holding right there. So you could have taken entry right here. It's holding for a few candles, you take entry, right? And the move failed. So you know, when you're in the move and you start seeing this happen for the other reasons that the move could be failing, let's talk about that, because that becomes exit, right? So in this move, we know that we have to target the start of this downtrend, which is right here, right? We know that we have to target this. This is the start of this downtrend. When we see this kind of stuff happening, when we have a straight candle up, right? You have kind of an indecision candle followed by an up and down candle. The move is failing, and it's pretty obvious that when the target is this far away and the move is starting to do stuff like this, it's failing. So, you know, I know on this particular day, because I was trading, Bitcoin was doing some pretty wild stuff. So you might have seen Bitcoin failing a level. Bitcoin and the other coins that are in this space with it do move parabolic to each other. So, you know, if Bitcoin is failing, you can use that as reasoning to get out of a trade if you want. And right there is when you could have re-entered, right? So we know this is a tested level right here. So we know our next target is this here. So if we're entering down here and we're doing the catching of the falling knife, you can see, you catch it and look how instant that entry becomes, right? And just see what it does. And so right there would have been the testing of this downtrend. So that's where you would have taken profits again. When you back test the downtrend, that got you where you were, right? So let's go back and let's do this. And you would have made 6.7% there. And then, you know, you could use these same two levels, because remember, on the hourly chart, you're doing this, right? You're doing this. This is the trend that you need to hold. So as long as you continue to hold this level, you can constantly stay in this move, right? I'm gonna just make this a bit smaller this way, just so I can show this test right there. So re-entry would have been either here or here once again, right? Keeping in mind this whole time that our end target was the daily target, which is right here, which is 1481, right? So we could have bought again right here. As soon as this level holds, we could buy. So if it goes down, it holds, it comes back up and starts to creep up, you know, that's where you can buy, right? And the level continues to hold. That's the same thing that we talked about before. As long as this level is not, as long as this is not breaking, right? As long as you're holding the trend, you're going to test the trend either which way. So it actually tests this trend again, which this is actually not a trend it needs to test. This here is not a trend it needs to test. This is already the tested level. This candle right here, right? This is not the level. That's not an untested downtrend. The untested downtrend is right here. You didn't start a new downtrend somewhere higher than this downtrend, so you don't need to retest that downtrend, right? So this actually just tests this trend again for a second time. People take shorts there, test it again, right? Continues to test it. And then, you know, you got to start to ask yourself that same question as to, is this move going to continuously move up, or should I take profits here? Well, let's look at this. You have a couple trends that are created in here, right? So let's just take this back, right? And we're going to change these to the teal, right? Because these aren't entry levels where you're going to enter the trade, but I just want to identify what's happening trend side. So you have a trend that starts here, right? This is not being back tested. You have a trend that starts here, right? This is back tested and bounces. So you have a trend that starts there, comes, bounce and test it. So you're not losing trends. You're just, and then you have another one that starts here. So you're just continuously making higher trends. So you're just continuously laddering up. So all you're doing is you're creating a trend here that holds. You then create your next trend right here that holds. You're now creating this trend which holds. And let's see what happens next. And that's it, right? When you start holding up, so not only are you holding these trends, but you are now starting to make higher trends. And then you finally reach your profit target of the day at 1481 here. And it does the first test rejection, makes this a tested level. And that's as simple as that, right? So that's how you define profit exits is the backsides of trends and what you've tested and what not. And you notice that we didn't ever mark this swing high out because it's not the start of a trend. Start of the trend is right here, right? This right here is the start of the trend. But this is not the start of a new downtrend. This is the test of an old downtrend, right? If this did something like this where this came up and it came up here and then it started down and laddering down, then you have a level there that needs to be tested. But it didn't ladder down. It actually just establishes first touch right here, comes straight up, establishes first touch, and then goes down, right? So now let's identify the final part of this, which we would have taken, entry somewhere here. And if we go based on the theory of not catching a falling knife, because let's talk about that for a second. So you can catch the falling knife here because there's going to be a bounce because this is an untested level. Okay, so I want to rewind this for a second before we move forward, and I'm going to delete some of this other junk on here because we don't need this right now. Okay, let's get rid of some of this stuff. Could have probably just Control Z, made it much faster, but hey, I like to do things the hard way, so it's okay. And let's go back in this move. Okay, we're already in the replayer. Let's get this here. Let's go back in this move here. Okay, so the first thing I want to talk about, we know we can catch a falling knife on this right here, right? We know our first, if we had a stop limit order, we know we can catch a falling knife here because this is an untested level, right? This is tested, so it's no longer important. This actually just should get deleted now. That's not even relevant to the move anymore, right? We've actually came down and created a new level to be based on. So this is not important anymore. This is an untested level, so we know our first entry can be right here. So this is accurate. This entry right here is accurate because we would have caught this down here, right? We can catch this falling knife right there, and then when we take profit target on this, right? That's pretty straightforward, right? It's an untested level. We're going to bounce right off it, and you can see the characteristic of that level, right? It's look at the way the candle reacts, right? It comes, it touches it, and it bounces straight up, right? It doesn't do this thing where it touches it and it starts to hold the level. It just bounces straight up. But when it's a tested level, it's going to do that thing where it kind of staggers around it, right? Same thing here, right? When you have this level here and this is untested and this is the test of the first time, you're going to come straight down. And then when this becomes a tested level, sorry, I might have said that wrong. When this is an untested level, so when this was solid, right, which would have been at this point here, it's going to come up and it's going to come straight down, just like this is going to test here and it's going to come straight up. But then when these levels become tested, then you're going to have this meandering around that level, right? So at this point here, this level is tested. We would not be catching a falling knife here. So let's see what happens, right? We need this level to hold because we know this is set up to break. So this level is actually set up to break already, that it's been tested. Just like on the top side, this is set up to break. The downside is set up to break now too. So in this moment, this could have quite easily been something that did this and then just boom, fell off the cliff because, oops. There we go. This is already set up to break. So this is a situation where you cannot catch a falling knife and you kind of have to let this level accumulate, and you have to see if people are accumulating here or distributing, right? Because this is going to be one of two things. It's either going to be the accumulation zone of the rest of the move, or it's going to be the distribution. And we can't tell that information yet because all we know is it's a tested level. It bounces off and it holds. So, you could have entered right in around here when this level is now holding and it's starting to show that movement up. Now is when you can buy, right? So let's continue on in the move. So that's where we would have bought right here. So we are going to identify this as, right here to right here. And oh, good, it's hidden perfect. We can see, it can be a surprise as the move goes up. Holy Hannah, that worked out nice. How much percentage are we gonna make? 12.5% on this. Ooh, that's nice. And the same thing here, right? You notice how there's no because it's a tested level, the same thing that happens down here where you're coming to test a level and you're meandering around it, the same thing happens on the top side, right? You don't get this hard edge break like you did here, right? You don't get that hard edge. You have this meandering around the level, and then you, not only do you have the meandering around that level, but look, you hold this uptrend, you create a new uptrend here, which you come, first test, bounce, hold, and then you make a new uptrend here, right? So as long as these uptrends continue to ladder up and make higher uptrends, right? And then that's where you see it. So how much could you have made on this trade? So you have 6.7, 12.3, so that's 19%. 3.5 plus 7.3 would be 19.8% plus 4.1, so 23.09%. You could, I think that's correct math. It's just head math. What did I say? 23.09? I think that's right. I don't know. It doesn't matter. I'm not going to pull out a calculator. It's probably wrong, but just we'll just call it 23% you could have made on this move, and you know, you could have identified this at you know, if you were to go back to here where the start of the downtrend is 1400 the previous day to 1800 that day. So, you know, over the course of one day in one of your trades, you could have made 23% on this one trade, playing it back and forth. And I don't know what's happening with the rest of this move. Actually, I have no idea. I just wanted to chart that piece out anyways there. And you know, like, what's happening here? Well, maybe it's going to move up because this is the start of this uptrend. You know, the next uptrend is right here. So, you know, we need to hold this now, right? So as long as this gets held and you know, we do this thing where we keep making new uptrends up higher, well, we're going to keep moving up until we back test the trend that started to bring us down, right? Until we back test this right here. You have to back test this down here because this is an untested level. So I hope that gives some clarity to at least the most important part of this, which is these first 5 pieces: the criteria of an entry, entry examples, how to take profit, the criteria of an exit, and exit examples. So that's those 5. Now, stop losses. Okay, let's talk about this for a second. Let's go to a trade that I'm in right now. Should we go to this? What should we use for this? Should we use something I'm in? Yeah, okay, we can. Might as well, because I have my exit stopped out here, and I already know this. So I entered TNT a little earlier. I noticed it, you know, started to hold these trends back here, makes an uptrend hold, makes an uptrend, holds it. So I took entry on this in this area here, right in around the very bottom of this, around 350, and we're at 355 now, and I could have taken profits, but I wasn't around today because I'm managing a stop loss. So the first thing I noticed about this is it's kind of going through an accumulation thing right now, and I started to look at the charts and I noticed something. I flip over to the 4-hour, and I notice we have a pretty consistent downtrend. So on the 4-hour on TNT, which is, I think it's pronounced Tiron. I could be saying that completely wrong. Don't hunt me down if I am. So we have this here, which is just this trend here, which has already been tested. So we have a downtrend here on the 4-hour that's already tested to break. So we have a tested level here, right? And then we have another, and let's make this dark blue, because dark blue is our 4-hour. And then we have another level here that's an untested downtrend, which is 446 sats, which is untested. So really my first target for profit is here. My second is up here, and there's a pretty clear downtrend that's created here, and the starting of an uptrend that's created, and it's starting to hold this uptrend. So when I am entering this this coin or this stock or whatever you want to call it, right? My target is this, so I'm going to turn this to green because that was the identified target, right? We want to, that's our identified target right now, and I'm just using these colors for this video. Don't take the colors I'm using here too literally. Okay, we have the start of an uptrend here, and let's just turn. We're just gonna keep this on green because, you know, really we're just going to be talking about stop outs in here. And we have the start of an uptrend here, right? And then we have the start of an uptrend here. So you can see how we're starting to do that same thing where we're laddering uptrends up, right? And we're starting to close out the downtrends. Like this downtrend was closed here, and so forth until we're going to start to close out that 4 hour, which was already tested, and yada, yada, yada. So I had entered this right here, right? So wherever you end up taking entry, you want to stop out when these trends start to get lost, right? When you start losing trends is when you want to start exiting out of this. So, oops, I want to break this down even further to the 15-minute, right? And we have an uptrend here, right? And more so we have an uptrend. You have one right here. So when this gets lost, right, this is where I want to stop out if I entered above it. For me, I entered around the 349 mark. I'm going to stop out if this breaks this level here. So from my entry of 349, if I lose this trend, that's where I'm stopping out. And that trend is so close to this trend that it's going to be the start, the back testing of trends. So for me, oops, that's not what I wanted to delete. It's okay for me if this tests right here, and if this loses here, this is going to be, you know, it's lost its uptrend momentum, right? So at this point here, this trend is created and it's bounced and held, and you know we're going to go up and we're going to continuously hopefully do this laddering, and this is just on the 15-minute, right? The hourly is, you know, the more important mark here. So if I lose this trend here, delete these arrows so they're not in the way. So this is very clear, and we can delete that, that's fine. So my exit on this is going to be the loss of the trend, right? Because that's when you see when things start to down test, and you could, you know, potentially re-enter in this trade down at 331 and average down, right? So my stop loss is going to be somewhere around here, 337 and 349. So, you know, what is my risk versus reward on this? And that's what you got to kind of ask yourself. And I will stop out right here at 337 and 349. So 3% is my risk on this, right? And then what's my potential reward on this entering from that point? I've identified, and we'll go right here from 349. Actually marked this one wrong. So 349 is where I entered, and I'm going to stop out at, say, 337, 2 sats under the trend, because if there's not enough buy to hold this trend, I'm just going to get out. It's as simple as that. If there's not enough pressure up, I'm just getting out of it, right? Versus risk, two different scenarios. 19% if I want to take that. Let's move these over a bit. We got 27% here. We've got 19% here. And then maybe we say that there's another downtrend here that we need to test. So let's take a look at this. We tested this one. We need to test this or this. We need to test this one here. So 388, right? So 3 potential profit, 388. Right there. So I have 3.5 versus 11, so that's 369, close to 3.5 to 1 risk versus reward ratio. So let's just get typewriter tool out. It's not a typewriter, but 3.5 to 1 is this risk to reward, right? This one here, so 3.5. So 7 would be 2 to 1, 14 would be 4 to 1, 14, 15, 16, 17 and a half would be 5 to 1. So let's say 5.5 to 1. I think that's about right. 5.5 times 3.5, 5, 10, 15. No, it's more like 6 to 1, 6, 12, 18. Yeah, no, it is more like 5.5 to 1. And then this one here would be, what would this be? 8 to 1. About 8 to 1. Might be 8.5. We'll just call it 8.5. I'm not quite sure. So risk to reward, right? I'm losing 3% to potentially gain 3.5, 5.5, and 8.5 to 1. So you know I'm risking 3% to gain either 11%, 19%, or 27.8%. But for me, you know, IDing this move and saying that it's smart to get into it becomes a matter of just looking at what I'm seeing fractally, right? And what I'm seeing fractally is, you know, this is an uptrend here, right? So if you look at this, this is the start of an uptrend. You can call it right there, right? So it actually didn't backtest this uptrend. It actually held the trend. So could it potentially do something now like this? Because technically, remember, this is now laddering up, right? So could it do something like this where it tests this and then comes back down to, right? Maybe it comes back down to this point right here, right? Something like this, right? And then it's going to ladder up the next move from here all the way up to here, right? So it's laddering right now, right? You have the trend here, right? You have this level here that's identified, and it's fractal, right? Just like what we talked about before, it's all fractal, or whether it's here or down here, it doesn't matter. It's all still laddering up, right? This has not completely come down to test down here, so it hasn't, you know, it's not looking to go any lower right now. It's looking to ladder back up because it's completed its trend mark, and it's, you know, going to start laddering up, but it has to break this back trend first. So that's what exits look like. And, you know, making this decision based on a 4-hour time frame where it's so obvious that this is gone through a downtrend and is now trying to test an uptrend, but really you're in an uptrend that's still laddering up, and then it's fractal to that, right? Like what's happening on the daily. Let's take a look at the daily, right? Well, you have the trend start here. You know, this is fractal to the daily, as to where this is fractal to that 4-hour level back from here. So it's still laddering, right? It's still, well, wherever that was, it was somewhere in here. I'm not quite sure. It was somewhere here. But this is currently laddering up, right? After a long downtrend, right? This is currently now starting to ladder up. You see, it's not back testing its trend here, right? It's starting to back test the trends that brought it to its low. So there's one right here, right? It back tested that. There's one right here. So let's look at this. On the daily, you have a downtrend that starts here. All right, let's clear this chart. We don't need any of this stuff. Remove all drawing tools. Right, you have a downtrend that's here, and it's already tested this to break. So, right, it's currently laddering up, and you know, if you were to go to that replayer tool right here, well, let's take a look. That's a downtrend. This is a downtrend. This is a downtrend. Looks like this one was already tested right there. So this was already set up to break. This might not have been, but regardless, we are where we are in the move, and that's fine. It doesn't really matter. It tests that to break. So where's the start of the next downtrend? Well, we're setting up right here, right? That's the next downtrend it needs to test. So it tests that downtrend. I guess this is quite a while that this move has been going on. And you can see it's laddering up here too, right? Like this is the start of that uptrend. This is a start of that uptrend. So there's laddering motion, right? And let's just make this a solid level. That right there, right? You have the start of the next uptrend, which is here, which is still laddering up here, which is still laddering up here, which is still laddering up here, right? So, and then you start to come back down and test those levels, and that's when you start breaking them, right? And this is the trend, but you know, in perspective to the larger, right, this is still laddering off this uptrend here. So this uptrend that starts here, this is still laddering up. This just closed out this part of this move, right? This closed out this part of this, oh, oops. Let's try that again. This closes out this part of the move right there. But that's still, you know, laddering up from back here, right? So this is still laddering up. So, you know, looking at the overall picture, oh, and that's where we are in the move right there. So this is actually, what does this look like? This looks like it's it has an uptrend here, a noticeable uptrend start right here, right? Because it holds this and it does all that laddering up, and then it comes back down. First touch rejects, come up. Second touch holds, and now that it's holding, right, now that it's doing that thing where it's holding, I'm expecting it to move up, right, because it's holding this level. Just like we talked about before, right, it's holding a level after a ladder. It's not in a downtrend, and it's already, you know, set itself up to break these moves up. So, you know, this is a trade I've entered, and, you know, always breaking down these fractal, and I'm not breaking down that fractal information to say, like, oh, hey, I'm looking to be in this trade right now, and I'm holding till 1,000 sats all the way from 300, you know, like that's insane. And it's very possible that it happens, right? Like this is how it goes, right? You see 200% moves all the time. And what is this level here? This is 200, and we'll call it 210%. I'm not holding this to make 210%. This is a weekly time frame. Maybe if I was to hold this for the next, I don't know, month, it could possibly do that. Or you could have some buying interest come into this thing, and it could just go crazy, and yeah, you could make 200% no problem, because the move is already set up to break, right? It's already set up for that. But realistically, all for me, for this right now, all I'm looking to do is to touch this level to take my profits there, and then see how the move unfolds, because I can't make that decision that far in advance, right? Like the tools that I have are to watch this thing unfold. I don't know if this is going to come test, break, just because something was set up back here, right? This work has to be done here first, and then there's more work that has to be done here first, and then there's work that has to be done. Well, this work is already done, actually. This already tested the level to break, and that's part of why I'm in this move, right? But there's a little bit of work that has to be done first, and that's where nobody can predict the future other than to see what moves have been tested and set up. So what I'm looking for is I'm looking for a sell here, right? See how far it retraces, wait for it to hold something that happens in here, an event that happens in here, right? So I'm looking, oops, starting to get a little wonky here. I'll just go back through this one more time. All right, I'm looking for it to come here, and then look for it to test some trend level that it's holding here, and then rebuy in this area after first selling this here, rebuy in this area somewhere, or maybe it's down here, or maybe it's another touch on here. I don't know. I have to see how the move unfolds, right? In order to come back up here and sell this, to do the same thing. See where the move ladders, right? Take that entry there, and then to go up into the next level that I've defined as what is relevant. So yeah, I think that's a good overview on entries and exits and targets, or you want to call this advanced targets. This is kind of the sequel to the targets module from the beginner's course, which the targets module gives you that understanding of understanding when you enter something, you should have it mapped out, and or you enter something with an idea of an exit target in mind, and this is how you actually execute it. So you see this as advanced targets or exits and entries. It's all the same. It's not the same as each other. One is a basic version, and this is the actuality of how to do it, and the real how to actually make this trade work. So entries and exits. What is an entry and exit? We went over that. The criteria of an entry, went over that in great detail. The entry examples, we went over that. How to take profits, we went over that. The criteria of an exit, which would be understanding where the trend is failing and stopping out of somewhere below that. Right, if you're setting a stop loss, well, that's not profit exits, that's stop loss exits, and then profit exits, which is the closing of trends, right? So yeah, I hope this has been a great lesson for you guys. I know everybody's been waiting a long time for this one, and this is starting to shift. This becomes a bridge into the next part of learning, as to where beginner was to define a foundation, and advance is to refine that foundation into advanced material where you can understand how institutional traders are trading, and this is starting to become the practice of that. So now we're bridging into the practice of how to be a trader on a day-to-day basis. Now that the advanced knowledge, it's time to put it into practice, and it's time to say, okay, I understand it now, how do I actually use this stuff? So this is now the bridge to taking everything we learned and starting to implement it. And then the next course I do in the future sometime, which I haven't decided if I'm going to release yet or not, which is the professional level course, which comes after the advanced course. If I ever decide to release that, that's kind of the future of trading, and where the next step in trading is going, and the segue from taking this stuff right now and then going to the extreme with it, things like exploitation of other people's patterns and habits, how to find profits that aren't defined in this course, the advanced course, because it's just too far higher. How to see where moves are being set up on a bigger scale, so not 5 and 10% moves, but the 100% moves, and the 150 and the 40% radical swing, stuff like that. So we'll leave it at that. I don't want to get too far into that. Hope you enjoyed this one. Thanks for tuning in. See you on the next one. Take care. Bye.